What does it mean to be dependable? It means you do what you say you'll do time and time again. That's why the cattlemen of this great nation trust Ritchie to provide fresh water on demand. Ritchie, proud to be a partner to the American cattlemen since 1921.
Hello, I'm Ethan Oberst of the CattleFax Closing Bell, brought to you by Ritchie Watering Systems. As the cattle market has had a short-term recovery over the last 3 months from the October lows, cattle producers have taken advantage. Producers have increased their short position over the last 3 months as the commercial net short position has increased by 60,000 live cattle contracts since the October lows. A commercial contract is held by a producer or consumer of that product, and in this case, fed cattle. Over the same time period, the non-commercial net long position has increased by 75,000 contracts as they have added longs and covered shorts. Non-commercial contracts are not held by those tied to production or commonly referred to as spectators. There is no easy way to directly or accurately measure the percentage of cattle hedged. However, one way to measure how many cattle are hedged is to take the commercial short position in the live cattle contracts and compare that to the number of cattle on feed. Currently, that percentage sits just under 50% when compared to the December 1st cattle on feed report. This is up 14% from the October number and the highest level since the summer of 2015. Since the beginning of 2010 through early summer 2015, we spent the majority of the time above the 50% hedged level. The peak occurred in July of 2014, just prior to our cycle highs at 74%. The recent increase can be accredited to the increase in live cattle future prices over the last 12 weeks. Live cattle future values have increased opportunities to lock in profits compared to the break-evens as the industry was buying in late summer and fall. Models show that break-evens range from $95 to $150 a hundredweight for the first half of 2017, presenting opportunities to lock in profits relative to where live cattle futures currently are. Expected percentage of cattle hedged to continue to increase if the deferred futures continue to present opportunities to protect profits and equity. The deferred live cattle contracts will have to continue their most recent rally in order for this to happen, as cattle feeders are currently buying higher break-evens than what deferred live cattle futures are pricing in. Thanks for watching. Remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.CattleFax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.